Darkest times offer the brightest opportunity. Look anywhere and you will find pain, trepidation and frustration. Literally, there's bloodbath on D Street as indices nosedive more and more day after day. Last few weeks had an unprecedented impact on the Indian equities as it has corrected sharply from its highs in a matter of few weeks. In fact, Sensex has fallen the most in a fortnight. While the short-term picture looks gloomy in the backdrop of oil price tanking and fear of corona outbreak, there lies a silver lining for the Indian equities. As everyone is concentrating on the darker side, let's take a look at the brighter side of the story. Fundamentals and valuations. Over the past few months, valuations have been a cause of concern, which has now moderated drastically in the course of just 1 month. And as corporate earnings are expected to improve from here, valuations might get re-rated in the near future. Fall in oil price. Lower oil prices could help India get oil at cheaper price, thereby improving trade and fiscal deficit. And if oil prices sustain at this price level, it could benefit India by $46 billion. Windfall for India. Fear of coronavirus could impact manufacturing units based in China, and India can utilize this opportunity to become a manufacturing hub for those companies and make a mark in global supply chain. Markets have witnessed worst. Markets have witnessed and endured worse than corona, like SARS in 2003 or MERS in 2012, apart from them being more fatal than coronavirus. The situation may seem out of control at present, but we shouldn't forget it is temporary, not permanent. Central bank measures. Central banks all over the world have taken significant measures to provide monetary stimulus by cutting interest rates and ensuring adequate liquidity in the banking system. This could be the mother of all stimulus that global markets have ever seen by the central banks. Even RBI has shown similar determination to tackle this crisis and have already taken various steps to improve liquidity in the economy. Additionally, RBI is expected to follow interest rate cut trend by central banks across the globe, which in turn will boost liquidity and support India's overall economic growth, while India's fundamental story still remains intact. Measures by governments globally for faster economic recovery. Governments around the world have announced various measures to bring the economy back to its feet and give boost to the overall sentiments. The Government of India has also announced formation of COVID-19 Economic Recovery Task Force under Finance Minister, which will listen to all stakeholders to take steps to minimize the impact of COVID-19 or novel coronavirus on the economy. Historically, markets have recovered sharply post previous outbreaks. Besides, negative scenario on fear of corona outbreak seems to be just a temporary setback, as even during previous global virus outbreaks, markets have corrected but sharply recovered. Every major setback has been followed by outperformance. At last, we must not forget that 1-year forward returns and 3-year forward returns since 2001 have helped investors generate wealth. Besides, a drop in market from its peak in just about 2 months offers adequate opportunity to invest at attractive valuations. As a long-term investor, one may consider large cap and multi-cap mutual funds to ride this opportunity, as these categories are best suited based on the current market conditions. So rather than panicking, it's time to make the most of the current market volatility, as that's where the opportunity lies. For more information, call 1800-270-7000 or visit adityabillasunlifemf.com or contact your financial advisor today. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.